They've raised their cash rate target by 25 basis points. This is as expected. 4.1% is where interest rates were. We've got a 4.35% read on this right now, all against this backdrop of CPI at 5.4%, real GDP 2.1%, unemployment at 3.6%. Let's get straight over to Sydney and get over to Paul Allen, who gives us the numbers in a bit more detail. We'll be waiting to hear what the new RBA, well, relatively new RBA governor has to say about all this too.
Yeah, that's right. Michele Bullock, second meeting in charge. And yeah, this time she's moved. But boy, it was a line ball call, wasn't it? 29 of 32 economists thought that the RBA would lift, and they have. So the RBA is saying that further tightening depends on the data. No surprise there. CPI at the top of the 2 to 3% target range by the end of 2025. So not a great deal of change to the inflation outlook either. And it was, of course, inflation that brought us to this point, that hotter than expected third quarter CPI print that we got a couple of weeks ago, really the motivation for this rate increase. So RBA saying it sees CPI at about 3.5% by the end of 2024. Well, it's got some work to do to get there because we are well above 5 at the moment. The RBA saying that underlying CPI was higher than expected in the August forecast, but it's going to do what is necessary to get inflation back to target. So we're seeing some losses on the ASX following this. The market ticking down. We're off by about 0.5% right now. The Aussie dollar slipping as well on this commentary. We did see it pop up a little just before the decision, but the Aussie now trading back below 65 cents, 64.5 cents against the US right now.
Paul, we have the RBA saying it'll do what is necessary to bring inflation back to target. The question really, what more can it do when you consider what G10 central banks are likely to do? They're likely to stand pat.
Yeah, that's right. It does raise the question of what next for the RBA. It suggests that maybe December is potentially live as well. So it's going to be interesting to see when we get forecasts rolling in about that. Because, yeah, as you say, inflation has been stickier than expected. And the RBA did move a bit slower than its central bank peers as well. Some other things to consider, though. We have had a softening jobs market in Australia. Building approvals data that we got last week was very, very weak. Business confidence is weak as well. So there is still the lagging impact of the 425 basis points of tightening now that we've seen come through from the RBA. So it will be interesting to see what the path is ahead from here. Another thing to consider is that many households here in Australia are highly indebted. There was some concern about what was known as the mortgage cliff as some of these fixed loans are rolled off onto the floating rate. We haven't seen too much signs of mortgage stress yet, but I'm just looking to see what the RBA says about household consumption here. The outlook remaining uncertain. Services prices continuing to rise briskly. So one would think, or also labour conditions remaining tight. So one would think in the rough analysis that future meetings for the RBA still very live at the moment. This might not be the end of the tightening cycle. A hawkish bias definitely still in place.